Good morning, good afternoon, delegates. Welcome back to another exciting session at Huddle 2021. Today's session is personally my favorite session of the day. It is on monetary policy and crypto. The moderator for the session is Gabriella, Board Director, Global Digital Asset and Cryptocurrency Association. The speakers for this session are my Santamaria, Head of Financial Advisory, Department of Finance, Ireland, Kapil Rathi, CEO, CrosstowerValentin, and Valentine Seehausen, Economist and Programmer, Frankfurt School Blockchain Center. I'd like to hand it over to Gabriella to initiate the flow of discussion, and I look forward to an exciting session with all of you. Thank you.
And thank you. Hello, good afternoon, and welcome to the IAMAI Huddle 2021 session on monetary policy and crypto. Today, we are joined by three dynamic and distinguished panelists, each with their own views and insights on the subject. Each will provide a brief introduction to their professional experience, as well as opening remarks summarizing their philosophy and perspectives on monetary policy and crypto. We will then deep dive into the questions at the heart of these two subjects and explore together the nature of crypto, the relationship of crypto to fiat currency, the impact of advancing national economic goals, and the advent and value proposition offered by central bank digital currencies, or CBDCs. So let's get started. Mr. Rathi, if you could please lead us off. Oh, Mr. Rathi, I think you're on mute.
Good morning, good afternoon, everyone. Thank you, Gabby. Kapil Rathi, CrosstowerValentin CEO and founder. We are a digital asset trading platform. We operate a capital market business for digital asset, and we also have exchanges based out of United States, Bermuda, and in fact, I'm really pleased to announce we launched our India exchange yesterday. My background is primarily about 20 plus years on Wall Street, helping build different regulated exchanges. I have had really amazing journey at some of the prominent regulated exchanges in US, New York Stock Exchange, International Securities Exchange, BATS, and Chicago Board of Options Exchange. Really happy to be here. Thank you.
And thank you. And now over to May Santamaria. May, if you could give us a few words about your background and what is your perspective and view on the subject?
Very good. Can you hear me okay?
Yeah.
Yes. Thanks, Gabby, for certainly leading this panel. I'm really looking forward to learning from Valentin and Kapil. I definitely think I am the dumbest on the panel. They have tons of experience. Not dissimilar to Mr. Rathi, I spent 20 years on the dark side of private sector in banking and insurance, and I joined the Department of Finance about 4.5 years ago as financial advisory. So I like to say that my role currently of the last 4.5 years have been a bit of a crystal ball gazing. I trying to look ahead to see what's coming that a traditional Department of Finance might actually not be looking at because it's a bit far ahead. And blockchain technology was of interest to me back in 2017, and been heavily involved, obviously, in bringing that knowledge and discussion to the table of the department in Ireland, but also European level. I'm also a member of the OECD Digital Finance Expert ad hoc experts group. I'm also involved with the Digital Currency Governance Consortium with the WEF, and also with Begin. So the intention clearly is to understand the technology and understand both the opportunities. There might be risks as well, but also to make sure that all the decisions that are made by the minister are informed decisions. They're not knee-jerk reactions out of fear. My philosophy to the technology is technology really is a tool. Yeah, it's the use of the tool that I think dictates whether that technology is bad or is good. And I like to use the analogy of the car. When the car was first invented in 1800s, late 1800s, it certainly didn't have airbags or even brakes or windscreens or anything else. And with blockchain technology, yes, clarity and understanding of the potential of the regulatory perimeter where it fits is important, but we're still building that car. We're still getting to know the best of it. So too much regulation too early on is probably not what would allow that car to evolve. So,
well, excellent.
Thanks.
Well, thank you, May. That was an excellent analogy, and I really appreciate your insights there. I'm going to pass it over to our friend and colleague, Valentin Seehausen. Valentin?
Hi, Gabi. Thank you very much. And also, thanks for inviting me. I think I'm the one that should have the imposter syndrome with people like you on the panel. I feel very honored. My background is, if Mai said she comes from the dark side, I might actually come from the light side. I actually have an activist and researcher and programmer background, and I think blockchain, I'm also an economist. I'm doing my PhD in economy right now, obviously, related to blockchain. I think blockchain is like very interesting because it's the intersection, obviously, of technology, of programming, and about finance and the monetary sector. And if we are talking about a car, like my narrative about blockchain is that for the first time, a car was built that could not be stopped by a government, and this was Bitcoin. And so this offered or like opened up the space for something to develop that regulators could not stop. And I mean, the idea was to invent a new financial system. And from my economic perspective, I would say in a financial system can only be built by a government. So right now we are in this very interesting phase where we are creating this technology and where we as a society can decide what do we do with this technology. And for the first time in decades, obviously also after the financial crisis in 2008, we are thinking about our financial system from a meta perspective. So I'm very pleased about like all the projects that central banks do about CBDC. I'm working in Frankfurt School Blockchain Center, but I'm also doing partnership management for the Digital Euro Association. We are trying to push CBDC and like with this like a public regulatory framework for cryptocurrencies and like governmental control about it. And I think this is gonna be a very interesting session with you guys. I'm happy to learn a lot. Thanks for inviting me.
Of course. Well, thank you. So just to kind of kick it off, this is where we get into the fun part. So really an interactive conversation between and amongst ourselves. As I've spoken to our panelists, the goal is to really treat this almost as if we were colleagues around a dinner table, sharing perspectives, building off of one another, and contributing to an active and constructive conversation. So just to start off, the question comes down to, is crypto money? Money is a social institution. It serves as a unit of account, a medium of exchange, and a store of value. And with the emergence of DLT, or decentralized ledger technology, cryptocurrencies really represent a new form of money, privately issued, digital, and enabling peer-to-peer transactions. So I'm going to throw it over to Kapil first. To what degree do you agree or disagree with that statement? That is one perspective. Can cryptocurrency acquire the role of money, and how would it do so? Kapil?
Yes, it's a really complex topic. So let me just kind of share a little bit of my own personal experience. I grew up in India, moved to United States about 25 years ago. My grandpa was a farmer. I remember when I was about 9 or 10 years old, I used to go to my grandma's house. We used to farm rice and wheat. And my grandma used to use rice and wheat to buy vegetable and spices to make meal and the dinner. So this is we're not talking about 1800s, we're talking about 1980s, 1990s. I'm pretty sure there are villages in India where we are still using some sort of barter arrangement. So it goes down to the concept of what is money. We have seen the evolution of money as barter, then eventually is turned over to goods, rocks, precious metal. Our ancestors have used copper, silver, gold. Then paper money came in. And then after paper money, of course, there are variety. There's definitely cash or local currencies. There are commercial papers. And then we moved into this era of plastic money. From plastic money, we moved into electronic money, which is Paytm, PayPal, Venmo. And now we are in a digital money era. So the money has evolved. I think when I think about it, what is money? Is money a noun? When we think about money, it's something we can touch. Is it an object? I think money is an attribute. It's an expression on communicating the value of something. How you communicate, can you measure the value of a unit? Can you store that value? Can you use this as a medium of exchange? If you look at cryptocurrencies, it has all those three attributes. You can actually buy coffee by using Bitcoin. Bitcoin has a case of almost like a gold analogy. It is a store of value, and it is probably the most sophisticated medium of exchange today on the planet. They actually offer some interesting characteristics that you cannot get from traditional money system. Number one, they are truly global in nature. They are easily accessible to users. In India, you can't get US dollar and euro that easily. You can get cryptocurrencies anywhere in the world. The fact that they are not backed by any political government actually protects them from political manipulations. And then distributed ledger technology, in principle, is less prone to malicious attacks compared to some of the centralized systems that we have seen in the traditional market. So if you look at some of those definitions and then some of these additional attributes that you get by cryptocurrencies, yes, I will call cryptocurrency as a money.
Well, thank you. And May, I wanted to have you build a little bit off of that. From your perspective, you had spoken about some of the evolution that we've seen in the digital asset space, and Kapil also spoke a bit to that evolution, going from rocks to precious metals to paper and plastic, and now finally digital. What are your thoughts on some of the perspective of crypto as money? Where is this going if we look at it from a broad global perspective? May?
Yeah, as Kapil has said, it's clearly a nuanced and the word or noun or adjective could actually mean lots of many things to many people. I'd like to maybe focus on two perspectives: the policymaker personal experience I've had sitting down to discuss the proposed market in crypto asset regulation that was put forward by the European Commission in September last year. I am aware that in India, as far as I know, there's been a couple of cases out there where they've said that cryptocurrencies may be money. Although, as far as I know, nothing has actually been put out there to say this is what it is. But it's very interesting because through the work this last year in discussing the market in crypto assets, and the idea of a global taxonomy of cryptocurrencies was already discussed at the blockchain policy forum at OECD level about 2-3 years ago. The truth is not all cryptocurrencies are the same. And we know, we've read the Satoshi's white paper on Bitcoin. We do know the intention of Bitcoin at the start clearly was to exchange. But you'd probably think, like, look about my babysitter up the road. She bought Bitcoin over Christmas because she was at home. She was bored. It wasn't her phone. Her friends were doing it. Her intention was to use that as a quasi investment, not as a means of exchange. But the intention might be one thing. I think now today is slightly different. So straight away from that cryptocurrency world, you'd probably be considering those almost like blockchain native cryptocurrencies like Ethereum, Bitcoin. Consider, could they be a money or could they just be something else? Then you have this new world of stable coins, the on-ramping from the fiat world to the on-chain proper. For the, what I would see is your, the normal man in the street that probably would be a bit put off by going to an exchange and actually purchasing Bitcoin directly. The stable coin is a good way through. It's been a nice change. So do stable coins potentially, for me, looking at them from a policymaker perspective, they behave more like money than maybe crypto or blockchain native cryptocurrencies would be. And then you've got your utility tokens, you've got your tokenizations of your property or your racehorse, and NFTs, which effectively are just tokenized IP legal rights. So all of a sudden, something that was just so groundbreaking and pure and revolutionary like Bitcoin has actually multiplied into lots of different things. And I think that is important. This is important because if you start using something as quasi-money, you expect that to have all the properties of money. So I don't know what's the case in India, particularly in the EU. If you put your money in a bank account and you keep it there, something goes wrong, that bank is effectively protected up to 100,000 euro. Something happens to that bank, there's another financial crisis, a bank run, you can actually literally get that money back. Someone who's bought crypto and is keeping that on their phone and might not realize that doesn't have those consumer protection like a bank account would do. So I do think, and I have seen, particularly when it comes to stable coins and the use of stable coins, they do use or they do behave like quasi money. And I think that's a very important point because they behave, and I'm sure you have the equivalent, obviously, also in India is e-money. E-money, at the end of the day, is not fiat currency. It's kind of in between. So we feel like, or certainly it feels, and maybe Valentin can shed more light on this, is we've had your fiat, we moved into e-money, and now we've almost seems to be creating this additional category of e-money that works there. Why I think this is important, I think there's room for all of those things. And I'm going to keep on my analogy with a car. There are lots of modes of transports, right? You can have a jumbo jet, you can have a yacht, you can get a train, you can get a bike, you can get a rickshaw, you can have a scooter, okay? And we've come to use the right mode of transport for what we want to do. So if I want to go from here to the shop up the road, I can use a scooter or something on my bike, which is quick. It would be a bit stupid for me to go and jump a train to just do 100 meters, or to try to use the train or a plane or a boat, which is not fit for a purpose. Maybe, and I think that's why I think that the idea of cryptocurrency is to use as money. I do really like that idea that we could use it for micropayments or fast payments, or even the closer loops where we do need to make quick payments across border, or when we choose to do a cross-border payment that we want it to be cheap because we know it's going to a family or a friend. So I think the possibility of actually using cryptocurrencies to widen up the plumbing that you use for those payments, for me, is just looking at the different modes of transports and how we've adapted to those.
Excellent, excellent. So we've, Valentin, heard about the evolution of money, the expansion of the analogy from the car to rickshaw, bicycle, jumbo jet. Tell us, especially from a macroeconomic view, what are your thoughts on this? Do you agree, disagree?
Yeah, thank you very much, and thank you also for both of your contributions. I come from a farmer area too. I've met a lot of cows and a lot of sheep. Happy to live in Berlin now. And I really liked David Graeber's book about the first 5,000 years of debt, where he actually says like money is debt. Like before people were exchanging coins and resources, they were actually like cutting little signs into wood. So I think I want to emphasize like first of like many definitions, like money is debt. And Yeah, to that, I would also say like only money is money. Because yeah, my point is like only a government can create money, because money has to have the security that Mai also said. In Germany and in Europe, we have this like 100,000 security that if your private bank messes up because they were investing in too high volatile assets, the government will come in and say save your money. And what most people don't really get about the money that we have right now is the money we use, the bank account money, is actually private money, because like the private banks only have like 5% of the money they have in the actual central bank currency circulation. So
Oh, Valentin, I think you've been muted. I apologize. Can you unmute, perhaps? I think we may be having some difficulties.
hello? Test,
Now
test.
you're back.
Okay, you're back.
Back.
Yeah, thank you very much. So yeah, that was really interesting. Like we've been discussing, like, is the money we are using actually money, and like how can governments like provide money? And coming back to the crypto discussion, I would love to distinguish between crypto as a technology and money, because like as you said, we have so many different aspects of crypto. Like we have like obviously assets. We can like we can use it for identity. We can use it as a data storage. And as the like how can crypto help is the question. And I think like speaking of Internet of Things, Industry 4.0, we have a lot of applications where we actually need a crypto or like a technology background for payment system, which will actually serve with like micropayments, with instant payments, international payments that have to be way cheaper than they are right now. And I think this is where central banks can step in. They can provide a regulatory framework for CBDC, or for like real money. This could be stable coins. Like we are talking about e-money, and I really like our narrative, because Elon Musk, who's building Tesla, started X.com, which is now PayPal, where they wanted to create a new money. But obviously they were doing it on a central database, and so the government could intervene with it. So now PayPal is like, it's not really true, but I use PayPal as an example for what e-money is. You have the database at a private provider, and they have a bank account where they have like the money, and they do the background work with them. For example, in Germany, it's a SEPA system. So I think when we talk about money, crypto can become money if the central banks are starting to regulate and provide the way for like the different forms of CBDC. And I think this would be very beneficial for the economy, because it would allow a lot of innovative business cases, and I think it would make our life better.
Yeah, and I think you've hit on one of the subjects that we kind of talked about in our pre-call for this panel, which is about the relationship of fiat to crypto. And in particular, you know, the fact that we're not looking necessarily at a competitor, but rather an opportunity for bolstering and also, complementing one another. Along those lines, I kind of wanted to open it up a little bit over and have Kapil comment a bit on, you know, the relationship and how and in what way crypto and fiat may be related to one another, and how they could work harmoniously in order to improve some of the outcomes that we see from both an economic and social perspective. Kapil?
Yeah, and totally agree with Valentin, how you're sort of kind of presenting the potential of this technology, but it does require some regulation. I think for crypto or different type of crypto assets become real money, it still needs to evolve. I think we are still in early stage of a potential technology that can take a bigger role. It has some inherent problem today. Number one, it's extremely volatile. for it to be real money or for it to replace fiat, it needs to stabilize. Just yesterday, Bitcoin dropped almost 20% within an hour.
Yeah.
You can't treat it as like a money if the coffee at Starbucks is going to cost me $4 as opposed to $3 from this morning. So it needs to stabilize. And I think the concept of limited supply of, let's just focus on Bitcoin as a crypto, which is probably the most spoken case about it as a replacement for fiat. The concept of limited supply of 21 million Bitcoin makes it a good store of value, more like a characteristics of gold from a supply perspective. It actually creates volatility within Bitcoin. And that's kind of hurting. This feature is sort of like a bug. The second issue is in the speculation around it, right? You can't really have a speculative asset to turn into a real money. The adoption is still really, really limited compared to, we're still seeing very limited number of merchants actually letting you buy and sell goods. And then finally, just the concept on a macro level, can it coexist with fiat? I think if the monetary policy itself cannot exist without talking about the fiscal policy. So you can have a borderless sort of currency system, but you cannot control local jurisdictions spending. You cannot control how to stabilize inflation in individual countries because they are really tied to the fiscal policy. So I think fiat is still a major sort of like a tool for governments to control inflation. Cryptocurrency is giving us a path, a way forward to improve upon our current sort of system. And I think it provides a really amazing use case for countries like Venezuela, Argentina, Bolivia, where if you don't buy your grocery on the day you get the paycheck, you may not be able to buy the same grocery tomorrow. So for those countries, I think what we have found is a new currency system that allows these countries to unpeg against US dollar. That's number one. And then to developed nation, it gives governments a competition that when they are printing money, when they are deciding these monetary policies, they have a competition. So in my opinion, they both are going to coexist. In certain countries, cryptocurrencies will have more value over their current fiat. In most of the developed nations, I think the fiat is still going to be the main tool.
Excellent. May, what do you think? Do you agree, disagree?
I don't disagree. Absolutely not at all. And that's what we're looking and what we're looking at this. I don't think, or personally, I think focus or the concerns or the uneasiness about crypto replacing fiat are just misplaced. I do think it's about additionality, complementary. And I think as Valentin has mentioned as well, and some examples that Kapil has said, it doesn't have to replace it because of what we can do, potentially what we can do with it. So there's programmability to the technology. So from a government perspective, what could you do with this? You could, and we've seen examples, I said, as part of the digital currency governance work with the WF this last year. I was very lucky to have interviewed many projects where digital currencies were rolled out. And you're looking at focusing, for example, on targeted host of SMEs. Sometimes you might be able to say, listen, there's a specific amount of funds and we want this amount of people in this age cohort, in this specific area that's been ravaged by fire to be able to do X, Y, and Z. Yes, you might be able to do that with fiat, and we still do that with fiat, but it's still going through a long process of months or processing or cost of cross-border and so forth. Whereas we've seen those pilot projects really attaining the same done virtually through the middle of COVID and doing quickly and safely by just actually transferring those people might think. So, and then it's not something that we get to consider, because at the moment we're looking at not the shiny lights, but we want what the technology can do. We really want to highlight the benefits of it. But the reality of it as well is, once you have a place where you could potentially filter transactions and start saying, well, how many people do we know of this, I know, political or religious affiliation, or what kind of transactional, depending where they shop or where they've done something, or what could you potentially do with that information? How could that be used against citizens, which is a potential for using the technology in the wrong way in the future. So I think they're both the sides to the same coin of using the word coin, but I do think it's going to be complementary. Maybe potentially it could replace paper money in the future. Who knows? At the end of the day, it costs a lot of money to print money and to store it and to cart it off from vault to vault. So it might replace it. But I do think that the future of it is complementary because of its additionality in the short term.
Excellent. And May, you kind of spoke a little bit to some of the both possible positives as well as challenges that relate to society. So looking at things like targeted disaster relief or privacy concerns. And I know that you had been saying at the World Economic Forum that this had been a component that you had studied quite intently. Can you talk a little bit or share with us some of the social impact outcomes or opportunities that you see, both with crypto as well as for programmable fiat currency?
Yeah, sure. And I don't want to preempt the report that hopefully is going to be published in October. And I have to say, I am just a very tiny pebble in a mountain of work. As I've learned so much from those who've actually worked in it. We were very fortunate to actually look at several projects, and not so much projects. There are some really interesting, super cool initiatives out there. Just top of my head, even like not just on the banking side, but on the insurance side, there was a volcano risk bond out there that was issued on the blockchain, and you go talk about actually really targeting relief funds in a way that has never been thought before. On the programmability, just top of my head, I'm just thinking about for example, a case done in Vanuatu, of all places. India. We're talking about India. We're talking about billions of people in India. But at the end of the day, it's a country within certain kind of borders, which is land-based. And then here you had Vanuatu, a country where it's all actually about islands, right? So what happens when you happen to be living on one island and you need to take money out of an ATM, which is an island somewhere else? So utilizing or getting to the point of the only work that you have to do is just people already using mobile phones. You have to get to them, just teach them how to download an app and how to use it. And then you can literally just go in and just tell them, listen, we'll send you the money, it'll be in your wallet. Just get to use that app and you'll be fine. And the same with the shops. All you have to do is virtually, which is what we did for this 18 months of COVID time, get to the shopkeeper and say, this is how you accept money in that app. So that little time of training that person how to use the app versus the benefit to the community locally would otherwise was impossible. They had to keep their money in jars in the bottom of boats. It was difficult for them to go from island to island. It just created the fact they had money at hand, they could store it easily, and I said obviously use it to really maximize the effect in the local economy. It just meant the shopkeeper could be paid faster without having to wait for someone to go to the ATM and to get cash and so forth. But the good benefit of that, Gabby, and to your question is, once you've had that, you can almost build a little bit of a credit score as well, where the money has been spent. And a shopkeeper or somebody would say, listen, you've received that money and you were able to pay with this, and this is what you did with it. And that, because that information now is available on that platform, you are able to build a credit scoring where it allows that person to maybe then go to financial institution of bricks and mortar and actually ask for a loan. So these are some of the examples, as I said, at a small level that we've seen that absolutely 100% had positive effects to those involved in local and smaller communities, particularly those where sometimes geographically was very, very difficult to get to.
Gabby, if I may jump in just on that particular concept of social impact and society, I actually just was at a conference and learned two important statistics. And May, you talked about app and payment. The number of wallets that currently are used on your phone have already exceeded the number of credit cards that are out there. That's staggering, right? So the young generation is more comfortable in paying through phone rather than actually swiping the credit card now. That number has already passed. The other important stats I learned was in the United States, about $68 trillion of wealth is about to be transferred to people of 30 or younger age, the Gen Zs and millennial. What that tells you is this new society that we are building is much more comfortable in using those apps. They are more comfortable in paying by phone. Nobody wants to carry credit card there. So if we are looking at where the future is going, I think the adoption of any sort of digital money is going to be much, much faster than the money that some of us have actually grown up with. Just wanted to throw those mind-boggling stats.
The great stats, Kapil. Very good.
Yeah.
Very, very good.
And Valentin, I'm going to pull you in on this one as well. Are we looking at a future of plastic and paper or digital?
Yeah, I think my opinion is quite clear. Thanks for the stats, Kapil. I didn't know that, and there were so many topics. Like, just let me go through them. Like, from my perspective, like, Bitcoin is no money because like the money has to have a stable value. We know inflation targeted is like the high priority of like most central banks, and I think this is a good thing. Like we need privacy. We have to talk about dispute resolution. I think like people actually like to have like people deciding about a case and not a machine like a smart contract. And let me just like say one sentence about banking the unbanked, because this is a narrative that is very often used from my perspective. Poverty is right now in this like in this age is actually a political problem. So I don't think like blockchain will solve this. Blockchain is a technology, but talking about our financial system will, and about like decentralized loans. And as you might know, like there were a lot of like community currencies before cryptocurrencies that were doing like trying to solve like poverty problems with monetary solution. No credit cards anymore, everything on your phone, everything super easy, and yeah, maybe everything going over CrosstowerValentin. Congratulations, by the way, for your market entry.
Yeah. Thank you. We're really excited about India.
Yeah.
Yes.
Well, you know, one of the other issues that we brought up, so we talked about a bit about some of the positives. I wanted to talk with you a little bit around one of the challenges, May, that you had brought up. And this was around privacy in particular. So I'm going to draw it out and actually throw it over to Valentin, because I know that he has done a lot of work in the CBDC space, and I'd really love to hear and to now take our conversation towards a focus on central bank digital currencies. And, you know, if we're seeing an evolution in this space, you know, what is the end game here? You know, tell me a little bit. We've gone from May's car to bicycle to jumbo jet. Tell us a little bit about the CBDC future that we're looking at.
Yeah, thanks, Gabi, for like bringing up this topic, which is my favorite topic, obviously.
Yeah.
The very interesting and cool thing about privacy is that it's very subjective. Like we in Europe, we are very, very focused on privacy. Like this is why most people actually want to keep cash. But if you only look on Europe, I think like the last poll was like 86% of people in Germany wanted to have privacy, while the second one, sorry, I don't know it by heart. I think like Spain, it was like way less, like 60%.
Yeah.
So I don't know about India. I don't know about China. So privacy might be a very European perspective on central bank digital currency. And what most people don't get about Bitcoin, like most people think it's private, but if you take in big data and if you take in like AI that might actually come, or like better processors in the future, like crypto is you don't have privacy at all. like at least I would say like 95% of all the transactions can be traced down. So privacy is, from our perspective, like from the Digital Euro perspective, Digital Euro Association perspective, just taking into account this polls, like one of the most important factors. A little shameless self promotion. We will have an event in a few weeks about it where we discuss this at the Digital Euro Association about privacy. Yeah, I think like there's this criteria of, or there might be a list of criteria that central banks need for CBDC projects. I would say personally, this should be a democratic process, but like privacy might be on top of it. Other things are also very important, like how can this how is the API to other blockchains? How fast is it? As I said, like how can a dispute resolution work? Like how can you rewind smart contracts? And yeah, I think these might be criteria for CBDC. And obviously there are different forms of CBDC, wholesale, retail, synthetic CBDC. I think this is not the place to go into details here.
Of course. And I see our host from IAMAI has rejoined us. What is our remaining time, my colleague?
We don't have any. Unfortunately, we are.
No worries.
Yeah.
Well, thank you all very much for the opportunity to share a dinner table conversation, I'll say, with such a distinguished panel of experts. It's been my pleasure to host today's session, talking about everything from the evolution of money, the opportunities that there are for advancing social and economic outcomes. It's really a pleasure, and we look forward to both seeing, the trajectory for the country of India as well as our global community. Thank you again very much, and this is the conclusion of our panel.
Thank you, Gabby. You've been wonderful.
Thank you all.
Thank you, Gabriella. Thank you, Kapil. Thank you, Mai. It's been a pleasure. It's been a very insightful discussion, and I believe that our delegates have enjoyed it. Before we close the session, I'd like to thank our partners, title partner ZPay CoinDCX, powered by partner CoinSwitch Kuber, brought to you by partner BitBins, platinum partner Facebook, gold partner Geotis, and bronze partner Hubi Global. Thank you, everyone. And delegates, please look forward to the upcoming session.
Thank you.
Thank
well
you.
done. Thanks, everyone.
Thank you so much for this.
Thank you. Really enjoy that. Well, bye.